Hello there, this is Ben Yost with the Direct Lending Team, and I hope you're having a great day. Today we're going to go over how mortgage lending really works, the truth they won't tell you about. So, what I want to do is I want to go over how mortgage lending really works for you as a borrower and a consumer. It's things that people don't want to tell you, and the main reason is because then it takes all their salesman-y, gimmicky, look at this hand stuff away, like you hear in the radio, TV, and internet ads. How this really works is think back when you were, where were you in 2008, 2009? Okay, just think back then and what was really happening during that time. What was really happening was you had the big recession, and the recession was blamed on lenders and banks. Okay, although we personally didn't have anything to do with it, but the big banks and the big lenders had created subprime loans, and that blew up the economy, and so that really made everybody mad. So what happened is in 2009, the government came in and took us over as an industry. So we're a government regulated industry. We have 5, 6 entities we have to appease, and 3 of them are bigger than the IRS will ever be. And so, because the government came in, the first thing they did is they took away 99% of the loans we used to have. So 99% of the loans so that we used to, that I so a lot 99% of the loans I had in 2007 I no longer had in 2009. The only loans that are really left now is FHA, VA, and Fannie and Freddie, which are conventional loans. Okay, the banks still do seconds and construction loans, and you still have land loans. But for a consumer, if you called up 100 lenders today and you said you gave me your scenario, you're going to find that they're all going to talk to you about either FHA or VA. If you are a vet, they'll totally talk to you about a VA loan. Okay, but for most people, they're going to talk to you only about an FHA conventional loan. And everything goes back to being an FHA or conventional loan. And what I mean by that is you've heard of USDA loans. Okay, USDA loans are just FHA loans in a rural area that if you get in their small box, then you can actually get in for no money down. Okay, but it's an FHA loan. You've probably heard of Home Ready, Home Possible, first-time homebuyer programs, even though they're not really for first-time homebuyer programs. But you've heard of Home Ready, Home Possible. Those are conventional programs that let you get in for 3%, but they're Fannie Freddie programs. You've heard of down payment assistance programs. We call them DPAs. Like, say, in Colorado, you have CHAFA. So all a down payment assistance program is if you qualify for an FHA or a conventional program, okay, you have to qualify for, say, FHA. If you qualify for FHA and you don't make too much money, then you can use CHAFA as an add-on to help you with down payment. Down payment assistance programs do not help you with credit. They do not help you with income. They only help you with your down payment. So again, you have to qualify for Fannie or Freddie to get, and then you can use a down payment assistance program if you don't make too much money to help you with the down payment. But see how what I mean? It all goes back to FHA or conventional. If you're a vet, it's great loan. VA loan is a great loan. It's a great perk to have because that you were a vet, and so that's all they'll talk to you there. If you want to prove me wrong, call up to 10 lenders today, and you'll find they're all going to talk to you about either conventional FHA or VA. But again, that's because they took everything else away. The other thing that happened is that everybody's closing costs are the same. Okay, I'm not supposed to be telling you this stuff because then it takes away that I can do this, I can do that. Bottom line is everybody's closing costs are within $100 each other, and here's why: FHA, VA, Fannie and Freddie, conventional, tell us what we can and can't charge you as a lender. Okay, they tell us what we can't charge you, so everybody goes up to that point. Okay, to where they won't get fined, and the fines aren't little; they're $1 million per loan per incident. Okay, but they'll go up to that point to where they don't get fined on the closing costs, just like you would if you owned a business. Okay, and that's why everybody's closing costs are, depending on the loan amount, are going to be somewhere around $3,200 to $4,200. Okay, but they're all going to be about the same. No matter what company I go to, no matter who you call, they're going to be within about $100. Half your closing costs are title fees, if that tells you anything. Okay, then you have about 1,000 for lender fees with most people, and $500 or $600 for the third party fees like state tax stamp, city tax stamp, that kind of thing, credit report, that kind of thing. Okay, so closing costs are all about the same. So that's not bad news. That's actually good news because we had people that would see you had an extra $1,000 in 2007, and they'd say, "Oh, I have a warehouse fee," and all of a sudden you get to a closing table and your closing costs were $1,000 more than you thought. Okay, can't do that anymore. So the government, taking us over, so to speak, is not totally a bad thing. Okay, so everybody's closing costs are going to be the same thing. Here's something that'll kind of floor you. Everybody has essentially the same rate, and the reason that is, again, let me say that again. Everybody has basically the same mortgage rate. And the reason that is because we no longer get paid on the rate. The shopping thing that all the realtors want to tell you to do, or you think you should do, or whatever, is kind of like comes from 2008 and before, because prior to 2008, if I got paid on the rate. So if I got you higher rate, I got paid more. If I got you lower rate, I got paid less. Okay. They took away all that in 2009. Again, not the worst thing. They took it away. We all get paid per our licensing on the loan amount. Okay, so I get paid on the loan amount. Okay, so I want to deal with people who have a higher loan amount. It doesn't have anything to do with the rate or a lower amount. To me, it doesn't matter, but you get the idea. I get paid on the loan amount. So every lender you talk to is going to want to make sure you get the very, very best rate. Didn't know that, did you? There is no incentive for me not to give you the best rate. In fact, it works to my detriment because um, I just mean I want to keep you as a customer forever, and so I have to give you the best rate. But the thing is that there are no really. Sorry, when your live things like this happen. The point is every lender wants to give you the best rate, and the reason is there's no incentive for them not to want to give you the best rate. The rates all come from the bond market, so when you see those tickers go across the screen, the bond and stock tickers, the bonds are in there. They don't discriminate. So every lender goes from the bond pools, the Fannie and the Freddie backed bonds. And so basically, what that creates is they're all going fishing from the same stream, so to speak. And so we're all within about an eighth on the rate. And that's why you hear about two ones and this and that, because it sounds good and it gets the phone to ring. But at the end of the day, we all have about the same rate. Okay. Um, and again, if someone out there had a half a point better, okay, than someone else, guess what? We would all work there. And then when the next lender came in was a half point better than them, we'd all go work there. Because all we get asked all day, every day, is what is the rate? What is the rate? And so we'd be silly and outright stupid if we didn't go work for the place that had the best rate. If you know what I mean. So we all work at places that have very competitive rates, and at the end of the day, we're about the same. So then your next thing might be, well, what does it matter who I go through? It matters a lot, because we're not all equal. Lenders are not equal. What you're looking for is someone that's going to get your deal done, communicate with you, walk you through all your options, and not put your earnest money and or your appraisal money in jeopardy. In other words, if you go through a lender, you could lose thousands and thousands and thousands of dollars. If you put $5,000 for earnest money, you got another $600 for the appraisal, you got another $400 for the inspection. There's $6,000 right there. You could lose if you work with the wrong lender. What you're looking for in a lender is someone who's going to communicate the whole way through, has your best interest, been doing it for a while, and does a lot of business. And the reason is that there's lenders out there that don't do a lot of business, and so they don't really aren't up on everything that's going on, all the new rules and all that kind of good stuff. So basically, that's how it works. Is basically you want to find someone that actually knows what they're doing, and you can trust, and they want to walk you through all their options. Okay. Again, what I do that separates me from 90% of my from the lenders out there is I'll actually jump you on a Zoom call where people come into my office, and I'll actually go through all your options for you, so that you totally know what you're doing, because that's how you really save a lot of money. Okay, because I'll have someone, they'll go out there and they're thinking they're going to put 5% down on a conventional, but they see this perfect home, but it needs, it needs some, tender loving care. It needs to, it's going to need 10, 15 grand in fix up. All of a sudden, they know they can go with a down payment assistance program because we went over that instead of me just saying, hey, go with this program. Okay, that's just how I do it. But again, I hope this helps, and I hope this helps when you're looking for a mortgage lender. That you're really looking for someone that is just going to do the job for you. Anyways, if you have any questions, let me know. Also, if I am so blessed as to have you work for me, you use me as your lender. Basically, I'll also be able to give you a free appraisal credit, which basically gives you a free appraisal. Again, hope you're having a good day. Thanks.